Good afternoon, everyone. Thanks for having me along. Just a little brief introduction of myself. My name is Tim and I'm financial advisor. I've been advising for about 16 years now. And before that, I was a chef and pastry chef, actually. And so I've done the apprenticeship. I've done all the late nights and early mornings and weekends and all of that, and earning minimum wages. And so, yeah, I just thought it might be a good start to just go through a bit of an outline of what we were going to talk about today. Basically, some of the main points around what can we do now with this current COVID-19 situation, and then some more general things that we can look at about how we manage our money going forward. So just starting off, what should you be doing now? We're in the middle of this COVID-19 situation and we're coming out of a lot of the lockdown type stuff. A lot of services and businesses and restaurants and bars and stuff are starting to open up. So a lot of this will be less and less important as time goes on, as we get through this next stage of reopening of some of the services. So what are some of the first steps that we can do right now? Getting refunds is something that we're pretty strong on, with cancelled flights, cancelled accommodation, concerts, those types of things. Where possible, you want to try and get refunds rather than credits. Taking a credit, I suppose, gives you a bit more of a risk as to whether the business is still going to be operating for you to use your credit. And it's a bit more restrictive in what you can and can't do. You might not be able to use it past a certain date. There might be restrictions on what you can use it for. So we recommend, where possible, get refunds. Now, obviously, all of you guys, thankfully, are all still employed, and so you likely won't qualify for any of the government assistance packages under the COVID-19 stimulus package, but you may have family members, siblings, parents, friends who maybe are entitled, may have had a downturn in their business or lost their job or something like that. So just check in with your family and your friends to make sure that everyone that's close to you is across all the entitlements that they could be getting from the government. Next step is to make sure you're not spending unnecessarily during this time. Anytime there's uncertainty, the best course of action is to rein in your spending where possible. So things like getting multiple subscription services, buying lots of new tech, increasing home online shopping, home delivery type stuff, using Uber Eats and all of that excessively, where you're really increasing your expenditure at a time that potentially you don't want to be doing that. You want to be reducing your spending and having some surplus in your spending, so that you have money available when things do get better. Avoiding extreme behaviour. This is a really important one around stockpiling loads of toilet paper if you're that way inclined. I'm sure you're not, but things like drinking too much or increasing the amount that you're drinking and the frequency, getting into taking drugs and things like that. It's important. Probably not so much for you guys because you're obviously pretty responsible, but your family and friends and people that you know that potentially warning signs are excessive behaviour, that maybe things aren't all well in their world. So check in and make sure you're looking out for each other. And the other one is scams that seem to be increasing at this time around click on this for this, free, Woolworths shopping vouchers, or you've got an important message from your bank, or here's something that you need to click on to get this extra benefit, or this where we need this information to stop your bank account being frozen, those types of things. So just be careful of those. Really seem to have ramped up in the last month or two, and the stats from the government around who ScamWatch has basically keeps track of all this type of stuff, and it's into the millions now, the amount of money that people have lost. So super important to be careful. If you get text messages on your phone from people you don't know that looks like it's from your bank or from the Woolies or Coles or whatever, just be super skeptical about that kind of stuff, and don't click on any links so that your identity doesn't get compromised or you don't lose any money or things like that. Another important area that you can do right now is to review your loans. You guys might have car loan, personal loan, things of that nature. So important to give your provider a call and see if you're getting the best interest rate possible that they have available. Oftentimes, if you can get in touch with your bank or your provider of your loan and ask them, hey, is this the best rate? Can you show me a better rate that you might have available? The other thing is, if you do get a lowering of your interest rate, that potentially might reduce your repayments. So we recommend people to stick on their original repayment that they were paying before, which will just get their loans paid off that much quicker. The less interest rate you have, the less requirement in the payment for interest. So the more you're paying back of capital, so you get your loan paid off quicker. You might want to potentially look at refinancing if you have a few loans. That you might have a car loan and a personal loan, and potentially even a mortgage. I'm not sure, but you might want to look at refinancing, consolidating them all together into a lower interest rate loan. And if you're renting a place, good thing to chat to the landlord as well, or your property manager, and say, hey, look, given current COVID situation, is there any room for rent freezes or things like that? So it's always good to ask. If you're on the front foot and asking those questions, then you've got the ability to get some savings if there are some available. And the other thing is that the changes that potentially are automatic on things like your cancelled events, whatever, they might automatically give you a credit or a voucher for the value. They might not ask you if you want a refund. They might just automatically process a credit. So in those situations, if you can't get a credit, best thing to do is to contact the company and ask for a refund as a first port of call. If you can't do that for whatever reason, just make sure you're aware of all the details of the cancelled event or trip or flight or whatever it is, and just make sure you know what the stipulations are around when you can, when you have to use it by, what are the limitations, and even putting things into your calendar to make sure that you don't, go over the time limit that you've been given. We're finding this with airline refunds or airline credits, that they're stipulating you have to have rebooked by a certain date, and so it's really important to know what those inadvertently cross over into a situation where you can't use your credit because it's expired. The other one is the change. This is particularly important for credit cards. You may have seen something like this card provider, and I just sort of want to highlight what the issues are with regard to minimum repayments. So if we look at a $5,000 credit card bill and an 18% interest rate, if you just pay the minimum repayment, and in this example is 2%, but a lot of the credit cards have been reduced to 0.5%, so it's going to be even longer. You can see there that if you were to pay the minimum repayment, it would take you over 33 years to pay the loan back. But if you just, so in this case, it's $102 a month. If you were just to pay $246 a month, I
feel bad stopping you.
That's all right.
I might just stop the recording there, and then
sure.
I'll the other links.
Do you want me to go back to the start of that?
maybe the NAB slide.
Yeah, okay.
Slice it.
Cool.
Cool. Alrighty, I'll just send you the links. They're ready to go.
Okay. Let me just get that. So the next area to be mindful of is your credit card repayments. A lot of credit card companies are reducing the minimum that you're required to pay. And so if you're set to repay the minimum, you might have received something like what's on the screen there to say, look, your minimum's been reduced. In this case with NAB, it's down to 0.5%. Normally it's around 2 or 3%. So if we just look at an example of what the difference with paying the minimum versus paying a higher amount, just by way of example, let's look at this one, which is $5,000 credit card bill, 18% interest. If you just pay the minimum repayment, in this example is $102 a month, and that reduces as you pay back the amount, versus paying $246 a month. You end up saving over $11,000 in interest and 31 years. So you can see the difference just in paying above the minimum saves you an absolute fortune in interest and time to pay that back. Now, this obviously assumes that you're not buying anything else on your credit card. So clearly, if you're just paying the minimum repayments and you're then buying more things in the next month and the next month, then you're going to be looking at a quite a significant interest bill and time bill over time as you continue down that path. So next step would be to look at what can we do from now on? Like, what's the next step that we should do? Once we've got the initial stuff sorted, what can we do just to make better use of our money and have stronger money management personally? And so I thought I'd just touch quickly on this ING Household Debt Report, which was done around Christmas time 2019 and a follow-up in January 2020. So it's pretty recent. And some of the findings that they found through this report was that 51% of millennials are ignoring their debt altogether. They just don't want to know about it. 44% of those people who surveyed didn't know how much debt they actually have. Now, that's super concerning as a financial advisor. You need to really know what debt you've got because it's costing you a fortune in interest, especially when you don't know how much you've got, because you potentially could be taking on more, which is like a snowball effect. It just keeps getting bigger and bigger the longer time goes on. I thought this was funny. 61% would rather open up about anything else. They'd rather talk about with other people anything else, including a bad relationship, problems in their relationships. They'd rather talk about that than talk about sorting out the debt situation. So if we look at the spending habits that they looked at of these respondents, 28% of the people that replied filled in the survey or the report were living payday to payday. So this means they don't have any surplus income available from one payday to the next. So basically they've spent everything by the time the next payday comes around, and they're just waiting for that next credit to hit their bank account so they can keep living. And that's pretty concerning. Well, they asked them, what are you going to do about paying back your debt? How do you plan to do that? 35% of the people hadn't even considered cutting back on what they spend. And 33%, and this is super concerning, turning to gambling or lotto as a way of getting out of debt, hoping to win some money to get out of debt. And, that's, as a financial advisor, that's super concerning because it's the stats and the odds of lotto and all of that is so concerning, where you using that as a way to get out of debt rather than reducing the amount of money that you're spending. So what can we do? What can we do long term? What do we put in place for our clients to help them get out of debt, to help them have a strong financial footing under them? The first step is 1,000 to 2,000 in cash. And by cash, we mean actual physical cash. And you don't have to have it all in one place because that's a bit risky, but you can have it,
a bit at home, maybe a bit at your folks' house, something like that. The ability to get cash. And the reason we recommend clients have access to a level of cash like this is where something happens and you can't pay for it via your debit card or your credit card. Classic example happened to me, Boxing Day a few years ago. Went to go out to the family Christmas lunch and I put the roller door up and it came off the track, buckled up and was about a quarter of the way up, couldn't get the cars out and the door was all hanging off. Took about 9 or 10 phone calls to different companies to find someone that was available before the 15th of January and ended up getting a guy that could come out and fix it, but it was cash only, being a public holiday, didn't have all the FPOS facilities and all that kind of stuff. So having the ability to have access to cash is really important. The other thing is, in the event of an emergency in terms of maybe like an environmental emergency where the power's out, things like that, and you can't pay electronically, your online banking's down, whatever it is, having the ability to have cash can really be a saviour. The second step is to work towards getting 3 to 6 months of living expenses in a bank account somewhere. Just an everyday bank account, one that you're not using on a day-to-day basis, like a separate, maybe high-interest online account. The goal is to get 3 to 6 months of your living expenses. So this is your core expenses, things like food and bills and the stuff that you need to pay for every day. So that in the event that something happens, you can't work, maybe you're changing jobs and the new job's not starting for another few months or whatever it is, there's a myriad of things that can happen in life that mean you're without work. If we just think of this COVID-19 situation, if you're a chef or a airline a steward or a pilot or work at a bar or something like that, and you just are watching the news and you get stood down the next day, the government just says, all right, all the restaurants are closed from now on. No one knew how long that was going to last. Thankfully, we're starting to open up now. But if you've got 3 to 6 months of living expenses in cash in a bank somewhere, it takes a lot of the stress of that away initially, and you can take stock and really work out what options you've got available at that time. And when you think back to before, when I was talking about people that are living payday to payday, this gets you out of that cycle of having to wait for the next paycheck to come in. You've got some security. Obviously, it's only 3 to 6 months, but for most people, that's enough to work out some options by the time the government comes out with some kind of help. You've got some time, and that's critical, particularly for people's anxiety levels and, obviously their mental health and their family security. That's a good one there. And then you reckon that's probably good, hey?
Yeah, maybe we'll pause it there.
Yep.
I'll end this meeting and then we'll go to part 3.
Okay, cool.
Cool, thanks.
Okay, so the next step is to make sure you're aware of what you're spending. This is budgeting, and no one likes talking about budgeting. We don't like bringing it up with clients because it's one of those topics that no one likes to talk about, but it's super important. Tracking your spending, you can use a lot of different apps. These days you can get one that we use with some of our clients is called Pocketbook. It's basically a free app that you can link your account that you spend your money through via a credit card or a debit card or something, and it will then track your spending and you can categorize it and see what you're doing. But for most people, the easiest thing to do is to print out a statement from your account that you spend your money from, get 2 highlighters and differentiate between needs and wants. So this is things like the needs section is your core expenditure. So it's food and petrol and the bills that you've got, maybe a phone bill and the rent or mortgage payments if you've got a mortgage, that type of stuff. Versus wants. These are the things that you have some control over in terms of how often you eat out, whether you cook at home or eat out, whether you get, how many different streaming services you have, what type of holidays you go on, what type of clothes you buy, those type of things that you can control. So basically you want to know, what are the things that I need and what are the things that are optional extras that I could, if needed, cut out in terms of spending if I absolutely have to. So then what you want to do is basically set a budget, which is set an amount of money that you want to live within for the fortnight, if you're paid fortnightly or monthly or weekly or however you do your budgeting, and then stick to it as far as possible. So you want to make sure that your budgeted expenditure, the amount that you want to spend, is less than what you're actually earning. So that way you know that there should be something left over at the end of every pay packet, and we use this to build that 3 to 6 months of living expenses. Once you've built that 3 to 6 months of living expenses, then you can start looking at building a savings account or investing or, whatever, building up a holiday account, something like that, so that you're building up your surplus every fortnight or month or how often you get paid. The other thing that you can do that is really good for saving some money is shopping around big expenses. Now, you can make your coffee at work rather than at home or things like that, or you can make you can make coffee rather than buying coffee out and save money that way. Or you can go, I've got home and contents insurance or renter's insurance or whatever I've got, car insurance, that kind of stuff. Shop it around. When the renewal notice comes in, go online, run a few quotes on a few competitors' websites and see how much you can save. The other thing is most of them will allow you to email in your renewal statement, and they'll then come back with a comparable product, usually quite a bit cheaper. So you can often save quite a bit of money by shopping these around. And in times of uncertainty like we're in at the moment, delaying large purchases can be helpful. It can be a good time to just wait, because a lot of things will be going on sale, especially as things start opening up and businesses trying to get more traction, that you can often pick up some good bargains. And when things are uncertain, you don't want to waste all of your extra savings that you've got on unnecessary large purchases if you can delay them. Obviously, if you need things, then you need things, but delaying large purchases or shopping them around so that you can find the best deal, spend a bit of extra time while you've got it. And we've all got a bit more time at the moment. So delaying those large purchases or shopping them around, taking some time, sending your renewal notices to a couple of competitors and getting the best deal. You can usually save a few $100s a year on those, home and car insurance especially. And this is the biggest one for us, is getting out of debt. Basically, there's 3 ways that we use for getting out of debt. Consolidation, obviously, is just getting all of your debts and refinancing them with another provider with a lower interest rate. The snowball method is another way of getting out of debt. And basically what happens with the snowball method is you list all your debts, starting with the smallest all the way through to the biggest, and you just start attacking the smallest one until it's paid off. Every extra dollar goes to the smallest loan until it's paid off, and then you move your attention to the next loan, and then the next loan, and then the next loan until you're out of debt. Now, the avalanche method is similar, but slightly different in the sense that you list all your debts from the highest interest rate to the lowest interest rate. So regardless of the balance, you list them in highest interest rate to lowest interest rate, and you start attacking the highest interest rate loan first. With every extra repayment you can, you switch your other loans to minimum repayments, and you use all of your surplus money and all of the money that you've got available to attack the highest interest rate, because that's the one that's, as we saw from the credit card example before, that's the one that's going to cost you the most in terms of interest over the long term. So one of those strategies, or multiple strategies there, getting out of debt really is the key element here, with making sure that you've got your as much of the money that you're earning stays with you rather than going to the banks or loan providers through debt, particularly credit card. That's where most people, credit card and payday loans and nimble loans and those types of things are really important that you get those eradicated as quick as possible. So attack those with vengeance, and then work your way through until you're out of debt. The other thing that you want to look at is sorting out your insurances.
Hi, me again. Sorry.
Yep.
All right. I'll end
Stop
this
that one.
And then we'll do number 4, and then we'll just go through to the end on that one.
Okay, cool.
Cool. Thank you.
No worries.
Recording.
Okay. And so the next step then would be to sort out your insurances. Now, this includes things like your health insurance. Given the current COVID situation, having good health insurance is really important, and always having the appropriate level of cover, so you're not relying on the public system, is important to just double check what you've got. You may be even still, depending on how old you guys are, listed under your parents' cover, so you may need to make sure that you get onto your own policy that's got the kind of cover that you need. If you think through what are some of the things that are relevant for you. The other one is income protection. Now, some of you guys may have this in your super fund, or you might have your own standalone policy, but what this insurance covers is if you can't work for illness and injury reasons, so you hurt your back, I don't know, dirt bike riding or whatever, then your income is protected. Now, this is not so much around what happens at work, because you would have workers' compensation for that, but this is if something happens to you outside of work, or a health issue that means you can't work. So it's important to check what income protection cover you do have already. You may have some in your super fund, but you also might want to consider getting a policy to cover your income for illness and injury, so that if you can't work for an extended period of time, your income is protected. Then the other one that's probably not as relevant but important to consider as well is things like life insurance, total and permanent disability insurance, so that if you pass away or you're permanently disabled, then there's a lump sum of money to either pay out any debts that you might have, or provide a lump sum to be invested to provide income for your family, or just for yourself. So that's another area to consider. Now, as I mentioned just previously with income protection, don't forget about your super. Know where it is. This is really important. A lot of people will have multiple super funds with little bits of money that they've accumulated from various jobs, part-time jobs, whatever, over the years. So it's important to know what you've got, and then get it all together, consolidate it all into one fund that's going to be your super fund going forward, and you can use that for all your future employment, and it's going to have the right investments. You're going to have an investment portfolio that's suited to your risk tolerance, and also whether there's any insurance in the super fund, because you might already have life insurance, total and permanent disability, or income protection in your fund already. So it's good to have a look at that and just see what you've got, get it all together, get it all in one spot, and then you kind of ticked off the superannuation part of your financial world. The last section is estate planning. Now, not super critical until you have a large amount of assets and a family and those types of things, people to provide for, but it's still important to consider what assets you do have, where they are, who owns them. Do you have joint investments with a partner or friend or something like that? What happens in those situations if something happens to you? And the critical one that we come across is people don't have a will. So you really need a will, and it should deal with all of the investment assets that you've got, as well as any requests that you've got for how your estate should be divided up or passed on, or whether there's any nominations that you'd like to make. Super fund nominations are where the super fund will pay out your balance of your super fund and any insurance as per your wishes. So most of the time you will make a nomination to the super fund to say, I want it to be paid to X or Y or whoever it is in your life that's, you've set up to receive that money, or you would like to receive that money. It's important to review this over time as relationships change and maybe your family dynamic changes over time. You get married or you have kids or whatever it is. Make sure your super fund nomination stays up to date with who are those important people you want to look after in the event of your passing. And the other one is powers of attorney and guardianship. Now, this is more about if you're unable to make financial decisions, your power of attorney would step in. If you're unable to make medical decisions, then your power of guardianship would step in. So it's important to consider potentially having someone who you could appoint to those positions if you, for whatever reason, can't make those decisions. So you maybe are in a medical situation or a health situation that means you can't make a decision. In a coma or whatever it is. A power of guardianship will allow someone who you know and trust to make those decisions on what course of treatment or whatever it is. So not super critical when you're young, but as you get older and there's more people involved in your life and your family gets bigger, then it's important to consider those. So that is all from me. I hope you guys got some good value out of that. If you've got any questions, I'm more than happy to follow up after this. So you just let me know either on any of those channels there, or I'm sure someone in the company will be able to field those questions and get them through to me, and I can respond to you then. So thanks for your time, and I really appreciate it.